Awesome. What is up, you guys? Welcome to another incredible episode of the Explain It podcast. We are your hosts. I'm Stephen Hunt.
And I'm Ingryd Hernandez.
And we are so grateful to have everybody on today. Thank you for joining us. We have an awesome guest today. Do you want to break that down a little bit, Ingryd?
Absolutely. So Joel is no stranger to the Explain It podcast. He was with us last year, I believe, and has taught me all kinds of great things about what a self-directed 401k plan is and how he believes it actually trumps a self-directed IRA.
Hey.
And so he dropped so many gems last year about how amazing this tool can be for your investment into your retirement, but also how to leverage it in the real world right now in real estate. So really excited. So well, how about we welcome Joel to the stage?
Yeah, without further ado, let's bring Joel on. Yeah. Welcome, Joel. We're so happy to have you here.
Yeah, thank you guys so much. Pumped to be here. Pumped to be back. Happy to share a little bit of information regarding self-directed 401ks and, you know, what our mission's all about at eQRP. So thank you both.
Oh, absolutely. We're happy to have you here.
Yeah. So I'm not going to try to overpower this interview because I have Joel like in my fingertips. I'm like, Joel, if I have a question, I just message him. So I know that self-directed 401ks is kind of newer to you, right?
Yeah, it is.
So I would love your input and like questions.
Oh, I'll have questions.
Cool. So Joel, how would you like to kick this off so that you can kind of explain what a self-directed 401k and why your company eQRP is like the premium company to go get one started?
Yeah, for sure. I think to kick it off, I'd like to share just a little bit about eQRP, not get too deep in the weeds. You know, I could do that in some one-off conversations, but just to give everybody a little bit of a feel of what we're all about. First and foremost, we're kind of a small company. We're 10 employees and we like to call ourselves A players. We follow our leader, if you will, Damian Lupo. He's been really in the real estate space for a long time. I spent a lot of time sub-2 lending back in his days and spends a lot of time now doing private equity. But his mission was really to help people take control of their retirement. And honestly, that mission of his that started about a decade ago stemmed from an experience that his dad had. You know, he was super close to his dad. And his dad worked super hard throughout his life, made contributions to his company-sponsored 401k, retired, started taking distributions. That's pretty much what everybody's kind of planning on doing, right? It's like we're all hoping to contribute to a 401k and then live off of it in retirement. Well, he watched his dad do this and essentially deplete his retirement. And it's not like his dad was living like this lavish lifestyle. He probably cut back a lot in retirement, but unfortunately he ran out of money, and that really frustrated Damian. Like I said, he's the founder of this company, and he knew that there was a better way. He was obviously having his own personal success at the time, and ultimately, you know, he said, I'd like to change this. I'd like to change this for people. He knew that there was a way to do this through a self-directed retirement, and the whole concept that the whole mission of eQRP is to help individuals take control of their retirement. And so that's what I want to talk about today. I want to just peel back the layers. It could be new information for a lot of people listening right now, or, you know, it could be relevant to some that are either A, doing it right now. Maybe they have a self-directed plan of some sort. We'll kind of break it down and talk through the differences of self-directed 401k versus IRA. But there could be people that have heard about this before and they just haven't taken action. And so my hope today, go ahead.
Oh, I'm so sorry. I didn't mean to cut you off. I was just going to say that story is unfortunately not unique, because 401ks, if you actually peel back the history, I kind of love history. How about you?
Same. Yeah.
If you peel back the history, the 401k was supposed to work in complement to pensions.
Yeah.
But if you folks saw a few, you know, moons and stars and sun, you know, cycles as I have, pensions started going away in like the 80s and 90s.
Yeah.
And so what was left was just the 401k. And if it was supposed to be a complementary product, unfortunately, it was not meant to sustain workers after they're ready to retire.
You
So,
hit it on the head. Yeah, you totally hit it on the head, because if you look at a 401k today, and believe me, we talk to a lot of people that are currently contributing, and some people are contributing, even well beyond the norm. Some are contributing up to the maximums. And there's a ceiling. Like, everybody has a ceiling, whether you're a high income earner or not. There's only so much you can contribute. And there's value to a 401k. Like, who doesn't want to defer taxes? Who doesn't want to, plug their income into, some performing assets, even if it's with Wall Street and it may not be like a high performing asset, it's still like growing. So, I mean, the 401k is a good thing, but it's just so limited. And like you said, Ingrid, gone are the days of pensions. Like, you're literally just left with a 401k, and people talk about it all the time. What about Social Security? What's that going to look like for me in the future? How about savings accounts? It doesn't matter how much you might even have plugged away in a savings account. Like, the purchasing power year over year in a savings account goes down and down and down. So believe me, a lot of people are worried. I'll even talk a little bit about some of our members who felt that. And they did their research. They found us, whether it was through someone like you guys, or, found us honestly by Googling us, and they've taken control. They've taken necessary steps to kind of make up for lost time, but also pump up their retirement so they can actually live on it and maybe even maintain the lifestyle that they're enjoying, if not more, in retirement.
I love that. And I'm totally a personal finance nerd, and that's what led me to getting into real estate to begin with. And one of the biggest things, and I've seen this with my own family as well, as most seniors that we're seeing, and Ingryd and I work a lot with seniors. It's one of our businesses is actually to work with seniors in their financial situations and trying to play damage control, essentially, is what we're doing here. We start to see that, like, how are we going to retire? Even if they were contributing to a 401k to some extent, nobody gave them that financial literacy. And even then, if we, like you said, start peeling back the layers there, the amount of fees, everything that really goes into a 401k or an employer funded 401k, the math just doesn't math. You really start breaking it down. You're like, how the heck am I actually going to retire? So I'm so excited to have you on and break this down. And it lines up so perfectly with what we do. And I'm excited for everybody in the audience to be able to hear and understand what it is that is so different about this compared to the traditional route that we're all sold through corporate America.
Yeah. And one thing I will vouch for is I loved the process so much of joining eQRP that I then became an affiliate because, and I see Dana is in our comments. Hi, Dana. I love Dana. He's such a wonderful wholesaler out here in Arizona. He's also converting into buying more. So thank you, Dana. We would love to help you convert your 401k. But as a former corporate worker, I was able to roll over an old 401k. And eQRP helped me with that. And so it's not just a matter of them helping you with like how to strategize. They have these other tools like we call it the Badger Tribe under this platform called Circles, but that's like the software software platform. But you can even talk about deals on there. And so you have this very specific community that all have sort of like-minded goals of growing their retirement. And so you're able to share in that experience of having this self-directed 401k and share deals. So eQRP is just like on top of it. I love it.
So it's essentially creating community with people that maybe don't have all the answers, but somebody else may already have the answers for them. Totally. That's so cool.
Yeah.
Awesome. You hit it on the head for sure. I was going to even mention, Steve, you really did hit it on the head, because we've tried to build like a turnkey self-directed retirement service. I've seen a lot of what's out there, in terms of self-directing, and a lot of people are left to their own devices. I was actually just doing a live webinar with Andrew Murray. I think you guys actually know Andrew Murray.
Oh, Andrew Murray. Yeah.
Yeah. So we're doing this webinar this morning, and gosh, I lost my train of thought here, but we were just
their own devices.
Yes,
they need
exactly.
guidance. I got you.
Check this out. So we're sitting there, we're talking. I'm sharing a ton of good content with the audience, And then this one individual chimes in. He's like, hey, I've got some questions for you. And it was related to borrowing personally from his eQRP. And I'll talk about that a little bit today, but he's asking great questions. And then his wife chimes in and she starts asking questions about a specific asset that they wanted to invest into a short-term real estate. And then it was great. Like, they asked great questions. I assumed that they were maybe curious about doing this themselves. And they said, oh, actually, we just got a self-directed 401k. And it made me think, like, why didn't they get this information when they first joined and got that self-directed 401k from another provider? Like, what was missing there? And so the reason I'm actually bringing this up, you guys, is because we've really tried to build a platform and a program for our members so that when they do get into it, they are not left to their own devices. They feel confident. Like, our goal is honestly to make them successful, self-directed investors. And so we really have tried to get feedback from our members, understand what they truly need so that they can just like walk through the doors, start A, B, C, and just go down that path and hopefully put everything into autopilot. They've had, all of their questions answered, and now they're just reaping the rewards of increasing the value of their eQRP plan.
Hey, Joel, we do have a question on Instagram. And if you're on Instagram, you should really come over to YouTube. But one of our followers, Epic Rich Man, which that's a really great name.
It is.
He wants to know, he has a friend who's a medical doctor. He has a 403B and a 401A. Is that something they can roll into a self-directed 401k?
Yeah, I love the question. One of our biggest client base is our physicians, our medical professionals, and we're constantly rolling over 403Bs and 401As, 457s. Yes, the answer in short is yes, and we'd love to talk to them. We have, like I said, a lot of members that are exploring alternative investments with available retirement funds that might even just be sitting there in an old retirement account because they've moved from one office to another. So absolutely would love to get in touch with them.
Okay, it's fantastic.
Fantastic.
That's
Well, in
great.
that case, I would say let's also start breaking down, like, what the heck is the difference between a 401k and a self-directed 401k? Because I've tried to bring this up to my parents and friends and family members, and they're like, no, I have a 401k. I do that. And I'm like, no, but is it self-directed? They're like, what does that even, what? So how would you simply put it? What's the difference there?
Yeah, the best way to describe it is by making the comparison. So a regular 401k that I think the majority of us have participated in is managed by the company, right, that you work for. They do everything on the back end. There's a lot of people, a lot of companies involved on the back end to make it function. There are advisors behind the scenes that are allocating this pool of 401k money from all the employees, putting it into the mutual funds, setting it on autopilot, printing out the statements and so forth. So there's like this huge machine on the back end to try and manage all of these 401k plans for these, or this one 401k for all of these employees. A self-directed 401k is like the polar opposite of that. It's structured the same way in the sense that they both are a retirement plan. They both follow Section 401 of the tax code. They both are managed by a document called an adoption agreement. And there's always a plan administrator, and there are always participants. So with the corporation, the big 401k that we've all participated in when we work for, an employer, there are administrators, there's trustees, there's plan participants that are employees. There's just like all these moving parts. With a self-directed 401k, there's just really one person that kind of runs the whole show. They're the participant. They are the administrator, they're the trustee. They have the power of the pen essentially to transact, but they're also the beneficiary. So all of the funds that are held in their self-directed 401k are theirs. I mean, they're not theirs in the sense that they can just put it into their pocket. It has to stay in the plan until they distribute at retirement. But what I mean is there's no big corporation on the back end. There's no company advisor. There's none of that exists, but they still function the same way in the sense that you put retirement money into it and you use that vehicle, the 401k, to invest it in assets. Some of the differences, though, with your company 401k that, again, I've participated in, the assets that you can invest in are so limited. And the reason behind that is because there's just a lot of complexities. If 200,000 employees of a big company, they're all participating in a 401k and they're all electing to, invest in real estate, some want to invest in private equity, some want to invest in land or self-storage. That's too complicated for a big company to manage. And so they limit it. They limit it to paper stocks. They limit it to bonds. There's no fluff. You're locked into Wall Street. You're limited.
Mm-hmm.
But with a 401k that we build for you, kind of going back to that concept of you're the decision maker, we write into that adoption agreement that you can invest in alternative assets like gold and silver, crypto, private placement, and so forth, because it's actually a lot easier to manage those assets for one participant and one individual. So that's
real estate. Come on, Joel.
Real estate is like the absolute like money maker. I mean,
right.
I would say if I had to like break it down, I would say more than 50% of all the assets in our 2,000 members eQRP plans are real estate, commercial, multifamily, even single family. So yeah, that's how I would probably like differentiate or like explain what is it at its core. It functions like all other 401ks because they all follow section 401, but it's like just the dumbed down version. And because it's so basic, it's easy to manage. It's easy to invest in the assets like real estate and so forth. So that's what it is in a nutshell, you guys. It's a 401k in its simplest form. It's just one individual participating.
I love that. And it sounds to me too, it's giving you control, right, of what you actually want to invest in. Because from my perspective, like I said, I'm a personal finance nerd. Right. And I was way into it. So I would go through and I would self-select whatever options were available to me with my 401k on my employer plans. But you were still limited. Most people don't even go that far. Usually they give you a couple recommendations. Hey, here's a couple funds that we put together. Just select one of those. You're good to go. I would break down all the different options that you actually have. But that I was already, 1% of the people probably at the company going in there and setting up my own allocations. And I was still limited on what I could even put those funds towards. It's still whatever they had available to me to select from. So, and here it sounds like we have the ability to essentially invest in any type of asset and make money how we want to make money, not how the company wants us to make money.
That is very true. And one thing that I remember seeing a story with Alex Hormozy, and he was explaining, and I get it. Most of us are maybe not totally on the Dave Ramsey train, but hear me out. Alex Hormozy was talking to Dave Ramsey, and he's like, look, here's where I'm invested through all my things, and it's mostly business and very little everything else. And Dave Ramsey actually gave him really great feedback. He's like, yeah, because that's what you know. So invest in what you know, because you'll probably make a better decision. And so the fact that your portfolio favors what you know, then if you know it well enough to bet on it, then you should. And so that's how I feel about investing my own 401k, my own self-directed 401k with eQRP in real estate.
Yeah.
Why? Because I know it well enough to use that as my tool for growth.
Right.
Yeah.
Even and to kind of build off of that as well, if it's okay, you've invested with me and not just in real estate, but you've invested in my business because you're here at the office. You get to see the work that we're putting in every day. You know that investment is safe. It's something that it's tangible, it's touchable. We're here every single day working through those things.
I know where to go collect my checks just in case.
Literally.
I love that.
And I think that's so awesome because now you're diversifying yourself too. You can invest with friends that have businesses and support small businesses and their growth. And that's so awesome. And it's such a benefit to us too.
Yeah.
I love that so much. Like, I can't tell you how true that is, what you guys are saying. You know, Ingryd, you leaning towards real estate because you understand it, you're in it. And even investing in the business, it makes perfect sense. I can't tell you, we have a project going on right now. It's a manufacturing plant, Ingryd. I'm sure you're fully aware of that. And those who have invested in it, a lot of them, they invested in it because they understood it. We've got one client, his name is Jeff, and he's an architect. And this can be said for many other clients of ours that are engineers and so forth. But when I was helping Jeff become a new member earlier this year, came from an architect firm. He's in his 50s. He's kind of staring down the barrel of retirement, and he's looking to sell his business eventually. Well, when we were starting to explore all of these ideas, he's excited about investing in real estate. The whole concept was new to him about self-directing his retirement, just so pumped and everything. And then I just introduced the concept of investing in this manufacturing plant. And, they manufacture trusses for residential and commercial real estate. And it piqued his interest, right? Like, here you are, you've got this architect that just understands framing, understands, building. And it didn't take him more than 30 minutes to review the business plan and understand wholeheartedly the success of the patent, the success that, we were planning out. And he's an investor, and so, yeah, you guys really nailed it when you said people who understand the asset class, they should have that opportunity to go and invest in it. It gives them more peace of mind. They're going to make better decisions, just like what Dave Ramsey said. It's go invest in what and what you understand. And I just can't tell you how much that resonates so much with our members, for sure.
Mm-hmm.
That's so great.
Yeah. So Joel, tell me, so let's say I have a retirement plan that what's give me your top 5 retirement plans that are typical of needing to be rolled over.
Yeah.
So you got your corporate 401k.
Mm-hmm. You got your IRA. So a lot of people are either manually contributing to an IRA, and this is super common with your small business owners. Small business owners are looking for ways to save for retirement too. Sometimes they feel like they get left in the dust. They're like, I can't contribute to a company 401k. What are my options? So maybe their CPA or their tax advisor, financial advisor tells them, oh, go get a SEP IRA. And there's a lot of value with a SEP IRA, but it is also limited. So a lot of people come to us and they're like, hey, I'm a small business owner. I heard about eQRP. I want to do this. Okay, well, what are we rolling over? It's a SEP IRA. Cool, let's make that happen. So we love moving over SEP IRAs. You've got your 403Bs, your 401As. I'm talking to a guy right now in Arizona who's retiring from the fire department. And, he's got a 401A. He's got a couple of 401As with the department there.
Is that typical with military as well? Is that what military gets?
They get a TSP. So they are typically contributing to a government sponsored plan, and that's the thrift savings plan. And I can't tell you how often we roll those over. We have a lot of folks that are also affiliates, kind of OGs in the eQRP space, and they're all connected to each other. If one person's working in a government agency, they know everybody. And of course, they move on, maybe they leave the government agency and they go do some private consulting or some private work. And oh my gosh, the amount of TSP funds that we roll over. The beauty of it all is TSP reworked their website last year. Thank God. It used to be a nightmare rolling those over. It can all now be done on their website. And so those of you out there that might be listening who have a TSP when either they worked for a government agency, maybe they were military and they've served their term. We love rolling those over because they're just so simple. So yeah, Joel, IRAs.
Oh, I'm sorry. I was just saying, and Joel, how long does it normally take when you start the process of rolling over?
Andrew Murray said it best this morning. He said it took no more than 2 weeks from the day that he had that initial first call with Sam until he was actually wiring funds to a land investment. So let that be a real life testament, basically. It could be shorter than that, honestly.
I can testify, Joel, testify.
Yeah, it took
me 2 weeks too.
Yeah, for real. Sometimes it's sooner. If we're working, those of you out there that might even have a Fidelity 401k, those are our bread and butter. I mean, Their process is as simple as calling their 800 number. They always pick up. 5 minutes later, the funds are en route. And we do all of the paperwork on the back end. So the client just kind of sits back and waits for us to give them a buzz in 5 days to say, hey, everything is ready for you. Let's deposit your funds. And then let's go ahead and take the next steps from there.
Okay. And so I think we kind of covered the answer a little bit on this one, but Caesar was like, hey, I could roll over my stuff, but I don't know if I trust myself to grow it correctly. So as my own personal experience, Caesar, I would give you this feedback, even if it wasn't necessarily related to a 401k. Go get educated in whatever asset class speaks to you. Maybe even if that is stocks, if it's precious metals, if it's real estate, if it's other business endeavors like what Joel just mentioned, where you can actually, invest in a growing business, almost like a angel investing.
Yeah.
And so I would say, Caesar, here's the thing, man, it's your life. You have to take control of it. But if you feel like you don't have the capacity to do that, you could do one of two things. Connect with folks like myself and Steven, where we can guide you a bit on the real estate side. We're happy to have folks who have self-directed 401ks invest into our fix and flips, for example, and we can help you grow it. If you feel like that is still too much pressure, then maybe you just need to have a good old normal 401k. I mean, it's not the guru.
Well, hold on there. So I want to break that down then too. So if we're going to talk about doing it that way, it sounds to me like you can still invest in all the things that your traditional 401k can invest in. So why not just pick the safe route until you know what it is that you want to do, right? With those funds, and slap it onto a Vanguard indexed fund that is most likely going to raise at 8%, annualized on that side of it. And then boom, an opportunity comes up where, hey, I think I can make greater than normal returns here. I want to invest with Steven and Ingryd, for example, on their next fix and flip, or I just want to place some funds in one of their buy and holds because they need to replace a private money lender and have it held there for the next 2 to 3 years.
Right.
Is that something that they could do at that point? Just sell off a piece of their index fund, for example, that they have funds in, and then transfer that over to us as working capital?
Yeah, I'm actually so glad that Caesar brought this up. I rarely hear this in discussions like this, but I'm glad he did, because a lot of folks are on the fence. Maybe they're actually genuinely concerned, like, can I really do this? And you guys you nailed it. You definitely want to get connected with people who are doing it. And it's actually not hard to find them. Just like you guys said, it's like, you guys are there. I'm sure you guys would pick up the phone in a heartbeat and say, like, yeah, let's have a discussion about real estate. In fact, Ingryd, I know you and we actually recorded a 40-minute video, and it's on our platform, where you basically broke down the whole process of sub-2 lending. And I asked you hard questions and you dug into it. We talked about due diligence. How do you find, the right opportunities and so forth? And so the information is actually out there. I think once you actually dip your toes into this space, you start realizing, like, it just opens up, and you start realizing, oh my gosh, there's actually quite a lot of information out there that can help me. And it's actually not as hard, as you might have thought it was going to be. But Steven, to your point, there is absolutely a place for paper stocks. In fact, a good majority of our members are diversified in real estate. Maybe they've got a little bit of their portfolio hedged with gold. But a lot of them will have a brokerage account in the name of their self-directed plan. And they have positions still over at Schwab in paper stocks, maybe some bonds as well. I had a client that wanted to invest in NVIDIA recently, and it's like, she had enough capital there and she was able to kind of rework that. So I think when you start actually spending some time in exploring this option, you actually start realizing, like, okay, there's people out there that I can lean on. There's really relevant content out there to help me. And when you work with a company like ours, you have an account manager that's fully dedicated to supporting you. So you can ask them hard questions. We have really, really good masterminds. The founder of our company hosts a monthly mastermind. We just had one this last month, at the beginning of this month, with a tax strategist. And they hit on a lot of topics. And one of them was actually vetting syndicators and doing due diligence. And so you're hearing from people that have been doing it for 20 plus years, talk about it, talk about the things that you want to look for, questions you want to ask. So if it's something you want to explore, you don't have to jump in head first. You can have conversations with people like us before you even decide to make a rollover and have a plan. You can continue your conversations with Ingryd and Steven. They just might look different now because you're actually exploring the space.
Yeah. And it's empowering. Like,
Oh,
that's
yeah.
one of the things I'm like, oh, you become the hot babe. Okay. You're like,
Yeah.
oh, you want my money? Well, tell me what you're going to do if I
Yeah.
give you my money, but we've hit the half-hour mark, and I want to remind you guys all, if you're getting value from this podcast, make sure you hit the like, subscribe to Ingryd or Steven's channel. And we hope to continue to bring other amazing folks like Joel and to tell us about their expertise. So
Mhm.
now you said something, Joel, which was syndication. Syndication. Do you think you could highlight what syndication is and why is a self-directed 401k better to invest into a syndication than an IRA plan?
Yeah, 100%. So those that might not know what a syndication is essentially a syndicate of individuals that are ready to invest, right? Maybe there's 20 people who want to pool their funds together, their self-directed retirement funds. Maybe some of them are using personal funds, but it's a group of investors, and they're commonly called limited partners. In fact, that's how they're actually structured in the agreement. But these limited partners get together and they invest as a syndicate in real estate. It's really common to find real estate syndications out there. And ultimately, there are general partners, or you can call them decision makers. They're the people that really understand how to take a piece of real estate and take it from its current condition and improve it. So they take the investors' funds, they apply it towards the piece of real estate. And those, again, general partners who are the operators, the people who they just get it. They know how to manage the property, they know how to manage the improvements. And then ultimately they know how to get renters into the commercial real estate and sustain that occupancy rate, that high occupancy rate. Ultimately what happens is if all goes well, which it typically does, you now are sitting as an investor on a really, really lucrative asset. And so as one of those investors in the syndication, you get a return. All of that rental income that's coming back, it's distributed amongst the entire syndicate. And so me being one of those investors that said, hey, I want to put some of my real estate money that I'm self-directing into the syndication, I get that reoccurring payment from the general partnership. And then ultimately what happens, and this is very common, that general partnership is sitting on a really strong asset. They'll sell that asset to another company. And they might sell it for, maybe 1.5 times, maybe 2.5 times the original investment. People walk away with really, really good returns. Not only were they receiving that income from all those, renters, but now there was a big sell, and these investors, these limited partners, are walking away with twice the amount of capital that they initially invested in. That is very common, and it's a very lucrative opportunity. Ingryd brought up a great point, though. We haven't touched much on a self-directed IRA, which is actually really different than a self-directed 401k. I'm not knocking on a self-directed IRA, but there are some things that you should be aware of that are a disadvantage to having a self-directed IRA. And there's a reason why a lot of people opt in and opt for a self-directed 401k. And it has to do with a thing called UDFI. That just means unrelated debt financed income. So what is UDFI? It's essentially income that's generated from a piece of debt financed real estate. Going back to that, syndication that I was talking about, there's a pool of investors that are investing in that project. On the back end, there's also some bank financing. It's really common. If, the purchase was maybe $2 million and the goal was to renovate it, eventually sell it, maybe the total amount of money from the investors, just for hypotheticals, is $1 million. Well, they had to go finance the remaining amount, which was another $1 million. Because that property is debt financed and it's going to generate income, it's going to trigger a tax on the gains for those that invested in that syndication with a self-directed IRA. I know that's a ton of information, and sometimes it takes multiple times to hear it, but the one thing you should walk away with is an eQRP is a self-directed 401k, and it's exempt from UDFI. And because syndications that I was kind of explaining are really, really common, if you decide to self-direct your retirement funds, it's likely that you'll participate in a debt-financed syndication, real estate syndication. You don't want your gains, especially when that property sells for 1.5 or 2 times the original basis. You don't want any of those gains to be taxed. And they will if you are using a self-directed IRA, because it does not have the UDFI exemption. They just follow 2 different tax codes. So I know that was a ton to unpack, Ingrid.
At the end of the day, do you want more money or do you want less money after you get out of a syndication that was profitable?
Yeah. Do you want the government taking that money, or do you want to keep it in your pocket?
I'm a great recapper, Joel. Here's what you should take away.
Yeah.
More money or no more money? I'll go with more money.
With that, Joel, I think for the layperson, right, the person that has a current employer 401k, how does this work exactly? Because I know a lot of people that would love to self-direct their 401k so that they could invest with us into real estate and these types of things, but they're still with their employer. They still have that employer 401k. Is that something that they're able to transfer right now? Or would it be something that once they leave that employer, then they're making that rollover happen?
Oh, such a good question. Let's touch on this for sure. So most of the time, I'm just going to say 7 out of 10 times, if you're still working for that company, you're still making those 401k contributions, there's not much you can do until you leave. So 7 out of 10 times, that's the case. It's just the way that their company sponsored 401k is written. However, we interact with a lot of people who, for whatever reason, it was written in to their company sponsored plan that, sure, you can go ahead and roll over while you're still employed. They call it an in-service rollover. So I'd encourage anybody that's like chomping at the bit to maybe find out if they can do this, to just write that down, in-service rollover. And that just basically means that you can roll over while you're in service. And go back to your HR representative at the office and just send them a quick little email. Like, hey, you know what? I'm very curious about an in-service rollover. Can you please help me figure out if this is an option within our company sponsored plan? They'll be able to get that answer for you right away. Like, it's not a complicated thing to look up. They'll typically either make a phone call, or maybe they have it documented on their dashboard where they manage the plan itself. In those cases where they can do an in-service rollover for the members, it's like a big day for them, because they want to do this and they're one of the lucky ones that have that opportunity to roll over. So I would just encourage you, if you're in that situation, just go ask your HR rep. If you're the small business owner, go, make a phone call to the company that's actually administering your plan.
Yeah.
That's great.
Mm-hmm.
Awesome. I do have follow-up questions to that too, if that's okay.
Please.
So love the in-service rollover. Now, what if somebody wants to, let's say, whether it is an in-service rollover or they've left their job and now they have this 401k sitting there, are there fees that come along with that? Do they have to take a hit on that 401k in order to roll it over to this new self-directed 401k? Because I do know that when I was looking into a self-directed IRA, which we slightly touched on there, I was essentially going to have to pay some fees because I was going to have to pull it out of my other IRA, then make that transfer. So I'd be hit with, it was like 10% or something like that, which at my age isn't too crazy, isn't that big of a deal. But I'm curious for maybe some of our other folks, like we talked about with pensions.
Or even Veronica, she's like, hey, I'm contributing to my 401k, but it's not growing for me.
Yeah. So what does that look like if they wanted to make that transition? Are there fees? Are there penalties that they're going to be hit with?
Yeah, this is a great topic, because what we want to accomplish at all costs, let's just say we're talking to somebody who is ready to go. They find out that they are actually eligible. We'll start there, and we will initiate a direct rollover. we want to do everything we can to avoid a taxable burden. We don't want to do a distribution. That would be a nightmare for anybody because of the 10% penalty if they're under 59 and a half, plus the tax that's going to come with it. So yeah, we do everything that we can. We actually like to try and manage this process so that there are no mistakes, and we'll initiate a direct rollover so that there's no, cost moving the process. Obviously, I don't want to gloss over the fact that we're for profit. There is a cost to do business with us. We can touch on that later. But in terms of the actual movement of money, we don't want any burden. We don't want any fee that's associated with that or anything like that. And so that's what it would look like for somebody that is eligible. If there's somebody that actually wants to distribute early, it's going to be a big blow. Let's say they want to self-direct. They are not eligible for an in-service rollover. And so they're saying, Joel, I just want to distribute the money. Can I distribute it and plug it into this, this 401k? And the short answer is they cannot. They unfortunately can't do that. They can't take a distribution and then just turn around and try and put the money into a 401k. Because once they take the distribution, what happens? It goes in their pocket, and now it's just considered personal money. It's no longer retirement funds. And you can't just shove non-retirement money into an eQRP plan without it being earned income, directly from business activity. So hopefully that makes a little bit of sense there.
Yeah. There's a line that can't be crossed. So eQRP is going to help you get to that rollover, the cast of being rollover. Otherwise, it's going to likely be taxed with distributions. Yeah.
Can I hit one more follow-up on that one too? I love this type of topic, by the way. And I run into this situation a lot, especially with working with seniors, especially just in our economic day and age that we're at right now. So I'll use a scenario that I've run into probably 6 different times that I'd love to get answers on, because as an investor, and I know a lot of our audience are investors, it'd be so great to use some of this capital. And I think there's an opportunity here to really help people retire as well. So I'm curious if this is something that's feasible. So let's say we have Jenny, and Jenny is a 65-year-old woman. Is
she from the block?
She is from the block. Yeah,
oh, okay, cool. Just check. Oh, okay. Awesome.
So Jenny is a 65-year-old woman, let's say, and she started contributing to her employer 401k when she was 40 years old because she got a late start. A lot of people we see got a late start.
That's early. I'm kidding. You should be starting 42, guys. That's why I said that. Yeah, do it while there's still a 2
But a lot of people just were never educated on it, right? Exactly. To have that financial understanding and foundation for it. So now we have Jenny, who's 65 years old. She's past this 59.5-year mark. But Jenny's looking at her 401k now, and she's like, cool, I've been maxing this out. I've been going hard on this, but I have 500k in my 401k. That's still not going to let me retire. There's no way I can retire on 500k. Could Jenny at that point then do a rollover into a self-directed 401k? And could Jenny at that point give up? I'll give myself as an example. I have a rental portfolio. Could she give me the full 500k? And I say, hey, Jenny, I will pay you 12% interest monthly, right? So it's annualized, but I pay you every month. That's $5,000 a month. I'm going to use this to go pay off my existing properties that I have right here. And now you're going to get a check for $5,000 a month that you can distribute to yourself, and that will be taxed. However, now you can live off of this because now you have $5,000 a month coming in on that $500,000. Plus you have your Social Security. You're making 6 figures a year doing nothing. So you were able to retire on that $500,000. Is that something that's feasible?
Yeah. In fact, so Steven, we have several members that are over 59 and a half. They are doing this. They are taking what they've, worked hard for, and they've, maybe like you said, late in the game, identify that there are other ways to generate better profits with retirement funds. And so they move it into a self-directed plan, just like you said, allocate it towards something that might be like fixed income. Maybe there's a fixed income fund and they feel really good about it. They have a great reputation. Yeah, they want to preserve that capital. So they do that. And yes, they're receiving that $5,000 distribution every single month that they receive that from you, and then they just distribute it and live off of it every single month, pay the taxes on that, of course. But at the end of the day, maybe when they're really old, they've preserved that asset. They've preserved their capital. So yeah, it's 100% something people are doing.
And that's what I see people fearing about right now, is that they don't preserve that principle and they go, man, I have nothing left over. Or what if I outlive this? And we're seeing that now too.
Yeah.
People are living longer. Like, what if I outlive this? My grandparents retired when they were 60. They are in their mid 80s right now, right? And we all know inflation's gone up. We all know, and they have very conservative investments because it's not the time to be taking risks. So I don't see it being an uncommon factor for people to have that fear of, I'm going to run out of this money. Now,
Yeah.
what do I do?
Yeah.
I can't tell you, like,
Go ahead, Joel.
I was just going to say that I can't tell you how, if we could put a panel together with our members who are that are living in retirement right now, how many of them would just preach the value of what we offer, and like, what does it actually mean to invest in alternative assets, even in retirement? We have one really, really close friend. His name is Bill Coppage, and he's in our community, and just a phenomenal guy. He was a Wall Street banker, and very successful. But short story long, he's doing this. He found and he placed his existing retirement money in proper assets, performing assets, and he's preserving what he can. And I like I said, just so many of our members are actually doing this, and they're better off. And it's crazy to think that there's so many people out there that don't know about this. I come from like the traditional institutional wealth management banking world, and it's kind of crazy to think how many people I interacted with back in the day where they weren't really able to preserve their capital. It was more like, okay, how can I now distribute this chunk of money that I have over time with the very nominal yield that I'm going to get year over year that might not even keep up with inflation? It's really challenging in the traditional space to keep up with it.
Yeah.
I had a family friend that this happened to, and she went to go retire. And this is right as like 2022 started coming around. 2022 was the year that she was going to retire. And as soon as 2022 hit, interest rates went up for real estate. A lot of things happened. There was a lot of uncertainty in the market, but her whole 401k that she was relying on took like a 25% dip. 25% dip. So all this money that she'd been growing for all these years, and it's compounding and going up, she thought she was going to live off of. Now it's all of a sudden, as the entire full amount, 25% less than what she thought. And she goes, I'm going to have to work for several more years. So I think that's such an awesome play, and that's so cool to know. And thank you for breaking that down, because so many of us investors, that's a responsibility we can take on. Like, we can help freaking America retire.
Yeah.
Like, with eQRP.
Holler.
For sure.
Yeah.
No, I just want to touch on this subject a little bit more. So when you think about that situation that you were just explaining, where, this individual invested the majority of their retirement in Wall Street. Again, no knock on Wall Street, but it's like, it's really, when you think about it, it's really just one class. Like it's almost like it's one asset class. And if the stock market is impacted negatively, everybody that's invested in the stock market is typically impacted negatively or positively, depending on which way it goes. So when you think about self-directing your retirement, you are opening the door to what we believe is like real diversification. You really are now having a position in paper stocks, let's just throw out some examples. So you've got land, you've got self-storage. You look at self-storage as an asset class right now, and it amazes me how many people are kind of moving towards self-storage, because I didn't know this until I started talking to some of the people in the industry, how big of a demand self-storage is right now for the younger generation. I didn't know this, but it is. It's actually growing. You've got a position in maybe some tech private equity. Maybe you've got some in mobile homes. I was actually just having a conversation with a company that syndicates mobile homes. Gold and silver. A lot of people want to have physical gold, like we were talking about initially, as a part of their portfolio to hedge against inflation. And so I think, just to sum it all up, that is real diversification. The most successful members that can sleep really well at night are the ones that are really spread across a few asset classes versus just kind of being in that one segment within Wall Street. They're gonna feel the hit less because they're positioned far better.
Wow.
Yeah.
That's awesome. Any follow-up for you? That answered my question. I came in hot with 3 questions right there.
I know. Well
Can we
done.
talk
Well
about-
done.
Can we
I'm
talk
trying
about
to
who is
remember the things
eligible?
I don't know. Go ahead. I'm sorry.
I was going to say, can we talk about who is eligible? I think this is a good thing to talk.
Okay.
Yeah.
That's a good one. Yes.
Yeah. A lot of people may not be aware of this, but you do have to be eligible to have a self-directed 401k. The people who are eligible, like right off the bat, are the small business owners. Those are the individuals that can say they have business activity confidently, right? It's just a part of their day-to-day. They're generating active business income. That active business income, they can even contribute to the self-directed 401k. So that is the ideal, eligible person for a self-directed 401k. Those that are W-2 individuals, they have to become eligible. And so what do I mean by that? You as a W-2 individual that's listening, you have to show that you have business activity. Otherwise, the plan, you wouldn't be eligible for it. Obviously, we want you to be eligible. We want you to take advantage of this. So we have designed our affiliate program to help with that. And a lot of our members who are W-2 are a part of it. It's a way for you to show the IRS, if you're ever questioned, yes, I have business activity. I'm an affiliate of eQRP, and I share their message. I market their message essentially across my socials, or maybe I host a webinar. I was talking about Andrew this morning. He's an affiliate. And, part of his affiliate strategy is to have a live every so often with me and him. And that's a way for us to share our message like we are right now with Andrew's community. So he's doing his thing, his W-2 thing. But at the same time, he's checking off that box of eligibility. He's generating business activity. And we compensate him for that. We compensate all of our affiliates for their hard work. So that is one way that you can become eligible. The key word, or like the key phrase, is business activity. You don't have to even generate business revenue or business income. As long as you can show that you've got some business activity. And we talk through that a lot for the folks who are W-2, who are kind of like, Joel, I don't have a small business. Like, what should we do? So we'll do what we can for you to make it possible if you're in that situation.
That's fantastic.
If I knew how to share my screen right now, I'd actually show the affiliate that I have with eQRP. Maybe my handy dandy co-host here may be able to do it, but I'm going to actually put the link in the comments for folks.
Present at the bottom.
I'm going to hit present, share my screen.
Yeah.
Okay.
That works.
Yeah. I just didn't know if it was going to share all my screen. Oh no, it's going to share just one of my screens. Okay. Fantastic. Look at this.
That.
I did zero work. I just want you guys to know I did zero work, and I was like, yeah, I'll be an affiliate. So I love what you've done is like you've taken all like the difficult, create a strategy, go do your thing. You're literally telling people, do you want a side hustle that is actually pro-America?
Yeah.
Honestly,
Yeah.
pro-America. Am I right? Like, here you go. Here's your link. Forget all those politicians saying all the bullshit you want to hear out right there. This is legitimately going to put money in your family's pocket, and you're going to help people retire and grow their money in retirement. So there you have it.
Can a company sign up for something like this too, Joel? So is it something where it's like, hey, I like this mom and pop shop over here has this crappy 401k plan. Can they go through eQRP in order to get that signed up for all of their employees?
Ooh, that's a tough one. So in theory, they could. So let's assume that mom and pop shop has 10 employees. And unfortunately, those employees are W-2. I say that unfortunately like it's a bad thing, but if they are W-2 and they want to participate in something like this or a 401k, the business owners would have to offer that, right? Just by laws, they'd have to offer that to their employees, but it can get super expensive. Remember my analogy of when you're working in the corporate space or when there's a big plan and there's multiple employees, companies don't want to do that because of the complexity of all of those assets across their employees. Mm-hmm. It's going to be super tough and quite frankly, super expensive for a small business owner. Now, there are small business owners out there that have 1099 employees. It's actually more common than So they might have 10 employees that are 1099. And in that case, you're not required to offer them the same 401k benefits that you might want to enjoy. So obviously, you'll get what you are looking for. It'll come at a much more affordable cost. Unfortunately, though, all your 1099 employees, they would just have to go get their own eQRP plan and do the exact same thing. So I guess it's not unfortunate, but they can do the same thing you're doing. They would just have their own eQRPs because they're essentially 1099 individuals or 1099 small business owners, if you will. So there is a way to make it possible. But when we start running into companies that have W-2 employees, it can get really expensive.
Okay. Well, that's good to know. And in our industry of real estate, a lot of our employees end up being 1099. I also own a property management business, and everybody's 1099. We have base rates that we pay, but there's also a lot of commission opportunity too to get things leased or sold or rented or whatever the case may be. So that's really good to know as well. Now, I am curious about when it comes to the lending the money out, because I know with the self-directed IRA side of it, I couldn't lend it to myself, and there were some rules against maybe family or friend. Like there were certain weird things around this. So I'm curious, if my mom wanted to go do this, could she lend that money to me, or could she lend that to my wife? What does all that look like?
She can lend it to me.
Okay.
No, great question. And I was also going to say, I think this would be valuable for people to hear before I touch on this. In your case, Stephen, you have those 1099 employees. We can set up kind of a discounted, structure for your quote unquote company so that everybody has an eQRP plan. So we would take care of that group that wants to do something like that. But going along with your question, you bring up a really good question, because there are some things that you can and can't do, whether you're using an eQRP plan or any other type of self-directed plan, like a self-directed IRA. You would not be able to invest in anybody's investment, or you wouldn't be able to lend to anybody's opportunity that's in your direct familial lineage. So mom and dad,
arm's length.
Yeah, it's got to be at arm's length. So just keep that in mind as you're considering these options. However, there are ways that you can lend to yourself and people in your direct lineage, and that's through the personal loan feature that every single 401k offers. Most people have explored the option of borrowing from their own company 401k. You can do the exact same thing with your eQRP plan. So if you needed to take out, and you had the available cash, if you needed to take out $50,000, that's the IRS maximum. You could do that. You could borrow or essentially lend out of your eQRP plan to yourself. And then it's at that point that you can lend that money to anybody in your direct lineage. But I can't tell you, how often some of our members have engaged in an investment personally because they were able to loan the money to themselves personally from their eQRP plan. We were just talking to somebody by the name of Keith. He's one of our newer members. He wanted to do a fix and flip, and he needed some capital to make it happen. And it was going to be fast. Like, he knew the turnaround time was going to be really, really short. He also knew that it was going to be an ultra lucrative opportunity, and he had done it so many times before. New eQRP member, has access to his capital now, took a personal loan, invested in the fix and flip. This was recent, so I don't think he's flipped it yet. But it's so much easier to do that versus maybe taking out a home equity line of credit for $50,000, or trying to secure some type of bank financing that could take 2 weeks for underwriting to complete. So it's such a fast way to lend money to yourself. And then at that point, you can use it for whatever you want. You want to use it to buy a car. You want to use it to finance your small business. You want to use it to lend to a family member or do a fix and flip like I was talking about. You have all rights to do that with your eQRP plan. And that's something you can't do with a self-directed IRA.
Boom. There are more details in managing this. But Joel, you have dropped so many gems during this podcast. Thank you so much for coming on. And I've shared the link that Joel has provided for me as an affiliate. See, it's Steven's turn to go get one now.
I need a link, Joel.
Yeah,
I need
and give this man a link.
do.
And so we would love to have you back. I do know that there's other parts of this that have, again, I'm a big old baby, especially with something I don't know very well. And one thing I really commend eQRP is that they'll answer all your questions. There's no too dumb of question, despite how many dumb questions I've sent. They've always been super nice in their customer service, answering, my calls whenever, email or text. So yeah, and there's a text function to actually get a hold of them, which I find that's
you use that a lot.
Yeah.
Mm-hmm. I love that. Yeah. So I really appreciate it. We're definitely going to have you back. So Joel, if somebody wants to get a hold of you, or they need to know more about eQRP, what do you recommend?
First, go to you. Honestly, They know you. You'll get them connected with us. But of course, you could always email me, and my email is super easy: joel@eqrp.com. But again, I would just love for people to get connected with you. Maybe ask you some of those questions like, hey, tell me about the experience. Like, I just want to know from your mouth. And I know you'll give them the truth. Like, you don't hold back. And so tell them what it is. And then for sure, we'll get connected to them through you. And we'll make it super smooth and streamlined.
Well, thank you so much, Joel. I really appreciate everything you've given us. How about you?
Yeah, this has been so insightful.
Yeah.
Like really cool information.
Awesome.
Yeah, I love this. Thank you guys so much.
Thank you. And then, guys, we are here every Wednesday from 1 p.m. to 2 p.m. Arizona time. I know that this is a different hour than normal, but we really appreciate if you could subscribe, like, and share this out with your friends and family if you found value. Thank you so much for being with us here for the last hour. And remember, it's every Wednesday. So once you close us out then, Steven.
Perfect, guys. Yeah, go ahead and hit the subscribe button. Join me and Ingrid here every single Wednesday at 1 p.m. We are always going to bring on awesome guests just like Joel, so we can talk about new things, not always needing to be real estate related, but trying to keep it in that world.
Yeah.
Without further ado, we are out of here.
Thanks.